Hey guys,
Ken, how are you?
I'm good. I'm good.
Great to have you on.
Sure.
Okay, nice to meet you.
Hi, I know. Yeah, it's here. It's Chen, not Chen, but yes.
נעים מאוד.
Okay, תודה רבה. Yeah, but unfortunately in the US, Chen is simply
That's hard.
too difficult. It's simply easier to go by Chen and that's it. And a billion Chinese can't be wrong.
Yeah,
So,
there you go. There you
Chen
go.
it is. So are we like immediately jumping on, or are we waiting? How is this gonna work?
Yeah, we'll give it a few more minutes. I think we had it scheduled actually for like 6:10.
Okay.
We do need to wait for Michael Hiles as well. So
No problem at all. So Norm, where are you based out of?
I'm in Jersey. I still have a hard time saying that. I'm in out of New York. That's how,
Yeah, I'm in the exact same situation. So
where?
Originally like office located in New York, but like many Israelis out here in Tenafly, in Jersey.
Oh, you're kidding me. We should have done this together then. I'm in Inglewood.
So we are like walking distance.
Yeah, I hope you're so if the power goes out, it'll go out for both of us.
Yeah, no, I think we have a pretty nice arrangement with the generator, so you could come over. Yeah, that's funny.
Yeah.
This area is pretty popular with the likes of us, I guess.
Yeah, no, it's great. It's close enough, and yeah, I still get to see some trees, which is nice. Hi, Michael.
Exactly.
Hey, how are you guys?
Hi, Michael.
Nice to meet you.
Pleasure to meet you guys.
Yeah. So the only thing is I'm after I got used to all the trees. The thing is I'm not going back to the city. Like even if a vaccine is miraculously found tomorrow morning, this train has left the station.
Good for you. I highly recommend trees and outdoors as opposed to concrete and other people.
Right.
Yeah.
So, Norm, I don't know if you know it, but I live really close to the Tenafly Nature Reserve, and there's like a 7-mile hike I do almost daily, and can't compare to the concrete forest in Manhattan.
There you go. Michael, we just realized that Chen and I are all of 2 miles away from each other.
Oh, no kidding. Where are you guys at? New York?
Right outside in Bergen County, Jersey.
Yep.
Yeah.
Well, I'm in the flyover. I'm actually
in the flyover.
Miami University. I'm about 20 minutes north, so technically in that Cincinnati area, the Cincinnati region.
I know. Oh well. Used to fly into Kentucky.
Yep.
And then spent a lot of time out there.
Okay. Did you go to Miami or what
No, I didn't. One of my clients was in Cincy.
Okay, cool.
So
you know all the chili argument between Gold Star and Skyline and all the.
Yes, it's very intense. Very intense. I don't know. I don't want to take sides here, and I've said
Skyline's the clear-cut winner. I mean,
there you go.
So Ken, it's in Cincinnati. There's a special type of chili. It's considered to be a Greek chili. It's more like a I don't know how to describe it. It's almost like a curry type chili. But then they serve it over spaghetti noodles with shredded cheddar cheese and onion.
Ooh.
And then they do coney dogs, which of course you guys know what conies are, being up in New York. But it's cheese hot dogs with chili on a bun. So high carbohydrate count.
Typical American dish, but in all honesty, I'm fairly new. I know Tel Aviv, not New York.
Okay.
I'm 2 years here. That's all.
So all the high fructose corn syrup and carbohydrates in our native diet. stuffed grape leaves and falafel. I mean, we don't do that very much here.
Yeah. Yes, even with salad, you have a hard time. But
well, it's good if you drench it with high fructose corn syrup and cheese. Salad.
I had.
Not a ranch out in Israel, right?
Yeah. Coming over here, I had the freshman 15 effect. I gained, just by change of diet, I gained weight, but then COVID came and much more exercise with it. So back to normal sizes, more or less.
Yep.
I disagree. Chen. I've gained the COVID-19 since the beginning of this.
It's like the freshman 20, huh?
That's exactly
right.
Yeah.
So for me, it's I used to live on an airplane before COVID. So such a world of difference.
I think for the better, personally. I'm super tired of sitting in. We have rush hour here. We don't have good public transportation like New York, so we get to sit in our car an hour in the morning and an hour in the evening each way to and from work, and listen to podcasts and cuss at our fellow humanity.
Yeah, I hear you. So yes, I think it depends on where COVID catches you in life in terms of stages. If you're in the bachelorhood stage, it's pretty miserable.
Yeah.
If you're in a relationship without children, heavenly. Children that are toddlers, not easy.
Rough.
But then if it catches you, a little later in life, where the children are a little older,
that's me.
Heaven. Absolutely.
Yeah, it's been great. In fact, we homeschooled our kids. We made the decision over the summer to just go ahead and pull them out because of the uncertainty with the classroom environment. And it's really been great. Dad works at home. Mom still goes out and about here and there with her job, but it's been really, really super. I'll be 50 in January, so my clubbing days are pretty non-existent. We don't do that. We go to bed at 9:00.
So what I do, I am close to your age, but my clubbing days are far from over.
Okay.
So I did do a lot of, I had this argument now with my wife. Do we go to Brooklyn or do we go to Bergen County? She won. So I did commute to the clubs, but now I just built a little club at home.
There you go. That's exactly. And I started cooking at home back in the spring if we were not going out to restaurants. And so I'm an avid barbecue pit master. And so I just went, and of course, when all the threat of the meat, supply chain was there, I have a big, all kinds of non-kosher tasty pig and, lots of stuff. So, that's all I've done is just grill and barbecue for the past 8 months. It's been pretty nice.
Yeah. So.
Hey, I think we can probably
sure
now.
Going live.
Interesting is the skyline fading. But yeah, so thanks everyone for coming. This is our kind of spotlight panel of the evening, blockchain in the accountant's emerging technology toolbox. And joining us today is Noam Heller from PwC, Ken Zur from EY, and our moderator, Michael Hiles from 10XDS. And I'll let them introduce themselves a little more.
Well, thank you, Jack. Appreciate the invite, and definitely a great necessary emerging angle on the blockchain conversation. Really appreciate Miami University and Miami Blockchain Club taking up the charge here with in particular internal accounting and accounting controls. So I'm Michael Hiles, as Jack said. I'm the CEO and founder of a fintech regtech company called 10XTS, 10xts.com. And we specialize in regulatory compliance frameworks for digital assets for capital markets and financial institutions. And so I'd like to turn over and introduce the panelists. Noam, if you want to introduce yourself?
Sure. Noam Heller. I'm a director in our finance effectiveness practice within PwC's management consulting arm. I focus most of my time these days supporting the CFO organization of technology, media, and telecom companies, and spend most of my time kind of doing process improvement work, system implementations, mergers and acquisitions, things of that nature. I thought maybe it would be worth like spending 2 minutes kind of giving my why am I here, my intro kind of to blockchain. And it really started kind of about 4 years ago, end of 2016, 2017. And I'm sure we have some crypto enthusiasts on the line. So Bitcoin was like, I think under 1,000 then. Ether was about $10. And the fact that I'm here today with you means that I did not invest that significantly. But how I got started actually was from a client problem. They asked us to solve a $200 million working capital issue. They thought they had millions of dollars to put back in income. And they said, help us with our problem. And their problem was around their invoice to cash process. They had a ton of customers who were not, they weren't able to collect cash. And it wasn't because of credit worthiness or issues like that. It really was kind of unsexy, kind of stupid problems that were going on between my client and its customers. And, and they asked us for a creative solution. This is, several years back, and we started talking about blockchain and whether that would be a kind of enterprise solution to solve some of these reconciliation issues. Could we get all the parties to work on a blockchain so we can get that agreement up front, so we'd be able to, eliminate all that downstream noise and be able to kind of just automate and accelerate the process. So once I got there, we went really far with that, really interesting, and kind of caught the bug.
Super, great. Ken.
Yeah, hi everybody. My name is Chen Zur. I am the US blockchain practice leader in EY. I'm a partner in EY, and what I do is work with around 50 developers in the US and around 250 worldwide within EY, developing blockchain-enabled business processes and blockchain-enabled ecosystem together with our clients, and that means that we are changing the way organizations work by implementing new blockchain capabilities. I can give maybe a few examples later on. This includes, it's very relevant to the topic of our discussion, because one of the things that we've done and we're most proud of is develop, together with Microsoft, a smart contract and a blockchain environment that is a system of record, meaning it is de facto a sub-ledger of Microsoft's financial books, and that of course has a lot of implications on also audit and SOX, etc., etc. So we are already seeing in production how blockchain is something that future auditors need to take into account and audit. Definitely something that we can talk about more. If we talk about, I'll follow Noam's lead and talk about my purpose for a second. I truly believe in blockchain's ability to change the world and make it a better place. There's so many things that we're doing with that in mind. around enterprise blockchain and around the way crypto and digital currency, not necessarily crypto, is going to make our economy more efficient. And that's the reason I'm in this. There is a real opportunity here to build a better world.
That's super. I appreciate that. Thank you. So to kick off the panel, Jack and I had talked ahead of time, and we kind of threw out some questions on a shared Google Doc that I know that you guys have had access to. But then I also like to kind of throw some questions for you guys to just think on your feet as a moderator. And I know that there's certainly been a lot of momentum lately around traditional organizations and even publicly traded organizations that are exploring asset diversification from a treasury standpoint, and looking to acquire and hold Bitcoin and potentially other digital assets on their balance sheet. From an auditing control perspective, to do what a company like MicroStrategy did, where they just went all in and purchased very significant amount of Bitcoin as really their first effort. As a large and particular regulatory reporting company, what are some of the key points that each of you would like to see in place, or that before a company even begins to consider purchasing and custodying digital assets on their balance sheet? What are some high level do's and don'ts that you're already starting to see in the marketplace that you could pass along to some of our listeners? Noam, you want to give us?
Yeah, sure. So I think, again, so I have a CPA background, so there's always an air of conservatism to kind of everything that I think about from that perspective. And it kind of comes down to frameworks, right? Is there a framework in place to kind of respond and give guidance, right? Is the SEC and other kind of bodies necessarily given kind of framework and guidance for companies to react accordingly? I think the last thing you want from, if you're especially a publicly traded company, is ambiguity. And you really, your kind of SOX team, your controllership team really want something to respond to or adapt to. I think if we, have increased formal publication of rule sets, and again, from a financial reporting perspective, gain loss perspective, tax perspective, I think that will kind of encourage others to kind of diversify their portfolio, as you said. I think some are jumping in rather significantly, which is really encouraging to see. But I think if, we need kind of the external bodies to who have a say in these things to really provide a perspective here so that we can respond accordingly.
Great, thank you. Go
And
ahead.
I would refer to maybe a few more tactical things that you should look at in that regard. Things like, how are you going to manage the custodianship of the asset itself? So is it going to be something you custody yourself, or something that if you ask me, I see much more happening? You will custody this with and I'm not doing any advertising here, right? A Fidelity solution, a Coinbase solution, or someone that is an expert in this area, and they will be the one who actually custody it. And then either way, you need to manage the access to your private keys, which definitely isn't as straightforward as in a private scenario. Another aspect, for example, something I just dealt with even today is how do you prove when the audit comes that you are the one in control of the funds? So the way we used to do this, and when I'm also an accountant, but don't tell anyone, it's secret. So the way Audit did it in the past would be, for example, by moving a small amount between wallets, and then this is a proof that you control the private key, but definitely not sustainable or scalable. You can't ask each time you come to audit a company to start moving around funds between wallets just to prove that they control the wallets. And one example we see this evolve to is start moving messages between the wallet rather than the assets themselves. This still proves the same thing that you were looking to prove. And we are now at the point where we're trying to productize this, meaning to make this scalable, not just for an audit scenario, but for example, let's say that we have a supplier-customer relationship, and now as your customer, I want to pay you, my supplier, but as I set up your account, definitely in an enterprise scenario, I need proof that I'm moving the money to the right account. Exactly the same way I would need this proof if I was moving fiat currency. So also here, I would ask you to post a message out of your wallet, and this is how I would know that this is your wallet, and I can move money and pay you through that. That's an example anyway.
Super. Thank you for that. And since you brought up audit, you said the A word.
Yeah, I apologize. Won't happen again.
What are your perspectives on at the very high level? And this is not a softball question by any stretch of the imagination. It could be very self-incriminating. How do you see the world of audit changing, given that once data and assets are moved to an immutable, permanent chain record environment? Doesn't this, invariably change the nature of accounting and auditing itself and place more of a front-loaded sort of responsibility to ensure the efficacy of data before it goes on chain, and really front-loads that front-load audit process? What are your thoughts on that?
What we're seeing, and I'll go back to the Microsoft example because it's a real live production case, where what we're doing in 2 words is using smart contracts to calculate the Microsoft's royalty liability to all the game distributors. So every month, Microsoft would take the total amount of FIFA games sold and would then calculate the due royalties to EA, right? That distributes the game on Xbox. So to answer your question, since we're using a smart contract to make this calculation, and the smart contract is the one generating the invoices, generating the accrual journal entries, and literally the one generating the proof to pay for both sides. So one side would take the AR invoice, one side would take the AP invoice. This completely changes the way audit behaves. One very strong example would be that right now, since it is 100% automatic now, we are auditing not a sample, but 100% of the transactions, right? And automatically auditing. One way to do that is we are running a manual calculation on Excel in parallel, at least because this is the first year this smart contract has been running. We are running a manual Excel in parallel, comparing it to the results, but doing it on 100% of the transactions. So that's at least one example. Norm, I don't know what are your thoughts.
No, I completely agree. I think what you said about sampling versus the full stack, I think that's absolutely right. I mean, I think the nature, again, I also try to hide my audit backgrounds, but the nature of audit is retrospective, right? And what we're doing here is you have access to the full history linked, in a sequential linked way that, that's you don't really have that kind of problem anymore. So what we've done, and I know EY's done the same, is kind of, try to jump out ahead of this, knowing that our firms, and I speak for myself, not my firm, but, is trying to get ahead of this is how do we change the nature of our audits when this is more, widespread, right? Because, we have a huge audit business and they're used to going after samples and looking at things. That's going to change, right? If we do get this adoption that we think is going to happen, it's been, I'd say, slower than maybe expected years ago, but I think it's going to happen at a much larger scale. How is our audit itself changing? And one of the ways that we're doing that is by developing essentially an audit node on the blockchain, right? So if we have, to use Chen's example, right, Microsoft and the various partners associated with that, does PwC, EY, Deloitte, whomever else have kind of a node that's in read-only mode essentially, and kind of audit live? And are you able to do that? And does kind of your kind of crazy year ends or quarters, does that change as a result of that? I think so. So I think we're still getting there. The adoption isn't as significant to really move the needle yet, but I'd say in a matter of years, it's going to happen.
Yeah, so let me give you two examples exactly on what Noam spoke about. One example would be with this audit node, how do you audit the transactions on the blockchain itself? So if it's royalty transaction or inventory moving or payments moving, you would have a record in your system of records, so you're in your enterprise ERP, and you would expect to have the same transaction happen on the blockchain. So what we're doing with this audit node, with this listener node, is downloading all payment history from the ERP, all token movements on the blockchain, and comparing 100%, and then flagging just those transactions that didn't happen either here or here. Another, I think, great example for that from a completely different angle, if you think about how audit works, one of the things you do is call all the audited entities customers and validate the balances and send them a note. It says that you are owed $1,000. Please that you are owe us $1,000. Please confirm. Once there is a single version of truth, and I'll go back to the royalty example, EA and Microsoft agree how much Microsoft owes EA. By definition, they look at the same data. So EA's auditors don't need to send a note to Microsoft asking how much are we owed the way you see it. EA and Microsoft are looking at the same picture. It's two copies of the same distributed ledger. Mm-hmm. So that's another way how audit completely changes and becomes much more automated.
I totally agree. And then you bring in, I know that in particularly the anarcho-capitalist cryptocurrency sort of, call it the cypherpunk space. There's a lot of chat around the idea that, it's a two-party transaction and everything's peer-to-peer, yet under the body of law and regulation, the government, there's no such thing as a two-party transaction. The government is always a party to your transaction. And so that brings into question then the nature of audit as it pertains to regulatory compliance, and in particular regulatory reporting, in particular for licensed and regulated entities, not just in the capital space or financial services, but across the entire spectrum of regulatory accounting. How do you see the various regulatory agencies moving to adopt and intersect beyond just the forensic tools that they seem to be using today with chain analysis and CipherTrace, but then to incorporate that sort of approach into a real-time, more regular connectivity to these audit nodes, or being able to issue a demand for record keeping for their own regulatory examination purposes? So
if I may, you're stumbling on a very sensitive topic, and I'll explain why. The way we see this develop over, for example, the public Ethereum, a lot of these transactions, and I'm putting aside cryptocurrency transactions.
Sure.
although it's relevant, but I'm talking about the larger enterprise, business to business, moving assets between them. No business would do this in an open environment where everybody can see all their assets and what they're moving and how much they're paying for it. These assets will be exchanged in a zero knowledge proof environment. So for all the crypto enthusiasts, like picture Zcash over Ethereum. And this is putting the authorities at a real problem here. How are you going to audit something that moves in zero knowledge? And this is where we would see regulation that, as you said, to every two-party transaction. Also today, your bank has visibility, your auditor has visibility, and of course the tax authorities have visibility. So these zero knowledge proof protocols, for example, Nightfall is an example, would need to provide visibility to anyone holding the right cipher key, such as the bank's auditors and authorities. And that would be how this evolves. Still, you know, authorities still have a long way to go to even understand some of the words that are used, let alone support them.
Agreed.
I think, Michael, I think that's interesting, right? And maybe I'll flip your question a little bit, because right, the whole kind of premise of blockchain is about enabling trust, right? And I guess the problem is a lot of the corporate entities that we talk to, you know, they're happy to have these conversations, but when it comes to kind of showing your cards with some of your competitors, that's where it becomes very, very challenging. And so kind of going back to the kind of the bodies, regulatory bodies, those are actually, I think, really well positioned to be involved in the conversation, right? And we've actually, spent a lot of time with various bodies and various industries developing kind of consortia specifically to address this, right? And it all comes down to incentive, right? A lot of times, a lot of these bodies, and maybe not from a kind of governmental regulation perspective, but there might be another kind of governing body in the industry that is very incentivized to continue having a part, right? A lot of what they've done in the past is be kind of the middleman, if you will, between one party and another party. If there's payments, if there's kind of contracts, very complex, they're doing a lot of that deciphering. They're kind of taking money from one party, making sure it gets to the next party without that, right? I think potential blockchain is, do we need you anymore? So that's a great question. And I think a lot of kind of bodies or whether it's industry or government is trying to jump in and say, hey, we're going to be the ones, we're going to be the trusted party within the industry to kind of create the blockchain, and you guys join us. So again, I think it really comes back to kind of incentive structure and how are they thinking ahead, just as kind of we answered related to how does the audit kind of thinking ahead.
So doesn't this actually beg back to the question then, if I've got obfuscated public chain data that at some level has to be decrypted from an authorized observer to really get access to the provability of the raw math, aren't we just simply shifting the burden of proof from my own internal accounting stack and the trust in the physical records that I give you now to the IT stack in the form of Oracle data and the protocol and the methodology by which now I, as an entity, might be, publishing and consuming data to and from the blockchain, but then proving that yours is also arriving at the same answer, since there are not only, there's no standards in what I would call those third-party Oracle on-off ramps of that information. Aren't we just sort of just shifting the burden from, the end physical PDF document and Excel report that I send to you as a partner, as a customer, to now I still have to at some level understand and trust that your IT stack is also providing you with corresponding real data?
So again, here where I think the distribution of data comes into play first and foremost. a lot of this data would be provided and held by more than just two parties. So again, in the Microsoft example, do I see in the future a Sony validating Xbox transactions over the same network in a zero knowledge proof kind of environment? Absolutely yes. So you don't need EA to trust just Microsoft. You need EA to trust the code. There's a very big difference. Mm-hmm. That's one thing. And the second thing that I think is also very relevant here is the fact that these transactions are, again, first of all, 100% of the transactions, and they are structured data. So if today a lot of the data exchanges hands in disparate Excels or paper PDF documents and Word documents that is by definition unstructured, mm-hmm. Definitely in the enterprise world, this data that we're talking about is structured, and therefore the ability to automate a lot of the validations is totally dramatic. Like it's night and day compared to the situation today.
No.
Well, I agree. I agree with a lot of what Jen said. I think that your point, Michael, is absolutely right. Are we not just pushing the burden on, further upstream or in a more digital fashion? I think that's true. I think that that's also, again, putting my kind of audit hat on, or where's the opportunity lie? I think it's in, really investigating those smart contracts that you're writing, right? Because people can't necessarily translate them. They can understand an email flow from one person to another with a royalty statement, but they don't know that they don't understand the kind of the scripts to really tell you that the smart contract, is trigger applied. So the question is, how do we get that all up front? How do we start doing it? How do we push the burden up front? And I think that's just, I'd say, generally been the trend in a lot of things we do. I think, again, I've been out of audit for 10 years-ish. And, it was increasingly, what are the ITGCs associated with the system, the ERP system, right? What are the kind of internal controls associated with that are trusting all the transactions? So less of kind of testing from a kind of, after the fact, more, how do we make sure that the machine is working?
So I guess this tees up then a little bit further, question that was posed from Dr. Brian Ballou to us as panelists. Go back to the ERP record balancing against the blockchain. In what instance, particularly with a public blockchain, would an ERP record be correct, wherein the blockchain supposedly single source of truth, but for some reason then be incorrect? So
that's a wonderful question. And again, exceptions would need to be handled, and eventually the blockchain behaves very similar to an ERP financial system, in the sense that it's not that it doesn't have errors. The thing is that when you do discover an error, you need to store it, or in other words, reverse it rather than delete the error. And then you have an audit trail. And I see this happening here also. It's not that you won't have discrepancies. You will have transactions failing here in the interface in between. You will have errors. The thing is, it will be much more automatic to identify them and then investigate and correct these errors and have an audit trail of what happened.
Yeah, I think it's the question popped up, right? When would an ERP record be correct and a blockchain record be incorrect? An example I could think of would be with kind of legal entity structure, right? Where, there's been changes, things have happened, there's kind of intercompany transactions, and all of the kind of the updates there may not necessarily have been reflected in the blockchain. So the entities who are trading may make sense and may be correct. How it's reflected in financial statements or in ERPs, from consolidation or elimination, taking out things like transfer pricing, that may not be fully incorporated into the blockchain. So I think that, again, is it there? I'd say actually they're both correct. The question is at what stage or from what perspective are we looking at from external financial reporting, which the ERP really is the source of truth for. That might be more correct in this case. But yeah, I again, and that's not transactional error. It's more, how are you looking at it? You're looking from a GAAP kind of external reporting perspective. You're looking at things from a tax perspective. I think that would be a kind of a situation where that may occur.
So then I'm, in finance at a company, and we've got the resources to engage in, some level of digital transformation. I guess that's the hot buzzword that blockchain R&D would sort of fall under for, particularly the bigger companies. How do I go about helping assuage the fears of the risk mitigation folks to allow us to dip our pinky toe in the water as a very, what are some things that you guys are seeing that are just, basic exercises that are practical and useful that I, as a finance person, could take away as, just walk before you run. Let's just try something here.
So first of all, that's a wonderful question, right? No, you want to go first?
I have a perspective. I think you have, Michael. You've hit the $1 million question, right? And I'll tell you, right? I don't do blockchain kind of full time. It's my side passion, and I'm not married to the technology, right? And I actually think that helps in a lot of the conversations. Is the first thing I would do is say, what is the problem you're trying to solve? Right? Don't be a hammer looking for a nail, right? We don't shove a blockchain solution where it doesn't belong. Is the first thing, right? So then really find what's the problem, and then kind of take some of the blockchain characteristics and understand, is there other better technologies out there? Is it faster, cheaper? Can we do it other? And if we're left to, no, I think blockchain would be a real solution, then work on a proof of concept perspective, right? You start small, right? Instead of working, if you're going to kind of do something across the supply chain, instead of doing it with 5,000 suppliers, start with 5, right? And just kind of prove the underlying technology. I think a lot of people are just really uncomfortable with data sharing, right? With competitors, with people in their supply chain. So if you can really start it kind of on a small basis, that's one place to go. I'd say the second answer I have is something that I've spent a lot of time working, is how do we lower the temperature, and how do we kind of get our toes wet in a lower risk situation? So one of the areas that we spent a lot of time developing is an intercompany solution, right? Intercompany is essentially just external transactions within the 4 walls of the company. And where we found a lot of success is in kind of multinational conglomerates who have a lot of business units, have nothing to do with each other. From an operational perspective, they do maybe send goods to each other, things like that. So those transactions, those are kind of separate parties from a reporting perspective. They really have nothing to do with each other. They all have their individual P&Ls. So, they definitely kind of represent an external world, but at the end of the day, it's all, left pocket, right pocket. So, we've kind of developed that scenario, worked with clients to say, hey, buy into this, see the benefits, see the speed, see the reconciliation, see all these things that you're kind of doing away with, and then the natural extension would be, all right, can we now bring this outside of our own 4 walls?
So my answer would be a little, I don't know, I would call it unorthodox maybe. First of all, unfortunately, I am doing 100% blockchain. I find myself speaking to lawyers and risk managers 30 to 40% of my time, and that's about 30 to 40% too much. But more seriously, in 2 words, what it takes is courageous leadership. And that is because this is risky. This is boldly going where no one has gone before. This has a lot of mitigation and everything. I agree with everything Noam said, and I could add 10 other things. Noam, I would talk to you about intercompany. That's a different scenario that with pluses and minuses, but regardless, yes, there are multiple risks. And I am under the belief that someone that is responsible, first of all, the key operative word in risk management is management, not prevention, right? I'm okay with managing the risk, but if you would leave it to the lawyers and risk managers, most of the time, the safest thing is not to change. That's safe, right? And most risk managers, that would be their comfort zone. And this is where you need courageous leaders in the enterprise, in the organization, to say, you are not in charge of taking the decision of if we do it. If it's a business decision, how is where the risk managers should play. And then there's a million things we can do and can't do. But start by removing the if from the equation. The if is a decision, not the risk managers should answer or even ask this question. And this is, very coming out of a very painful, I do this lawyer risk manager discussion all the time.
So I'm an engineer, software developer, and then I got into business, after that. And so I find it very interesting that I spend similarly a lot of time talking to attorneys more than anybody else. But by nature of logic, it makes sense. I've really done a deep dive in the esoteric notions of Western philosophy and Wittgenstein and Husserl and the whole phenomenology between writing code and writing contracts. And I always tell my younger attorney friends that if you're under age 40, you better get some coding experience, because you're going to probably not see the end of your career if you don't. I think I'm crazy, but so I tell the old guys, don't worry about it. But to the extent that you guys have experience working in large organizations, we all know that large organizations have grown through the years through acquisition. And that invariably comes with a patchwork quilt of disparate technologies. And I'm old enough that when I first started in my software development career, the IT, of course, it was called data processing back then. Data processing was subordinate to the controller, underneath the accounting department, because that's why companies paid millions of dollars for mainframe computers to get these wonderful green bar, big giant reports. And then IT kind of became its own animal, where you have a chief information officer sitting in parity with a chief financial officer. And how do we cut through, we'll call it the biases, the preferences, and the known staked territories between IT camps within organizations to really implement this notion of a single source of truth or a system of record? How do we cut through that noise and really operate from that, realizing the potential of what the promise of automating trust really is?
So I would start by saying that I see this problem as a secondary problem in the sense that the real challenge lies, blockchain isn't a single enterprise solution. So it's not that you need to convince a single set of CIO, CFO that have a competition between them. You need to convince several CIOs and several CFOs at the same time. Mm-hmm. So the challenge starts, or the challenge is much larger than just between the internal organization. And that's where the pain is, and that's where this goes back to the courageous leaders. There's the technology is in a state where we don't need the 80% that are comfortable at being fast followers. You know, every time when an account partner comes to me and says, wow, my organization heard about blockchain, they want to do something. My first question is, are they fast followers or are they first adopters of technology? And 80% would be, you know, the way I put it is I ask, when I come and after I convince them, will they ask me, where have you done this 3 times in the past in our industry, and then we're all yours? If that's the question, great question. I'll talk to you in 3 years, right? And that's really the key to reaching the C level. They need, and I can give you an example from an agrotech company we're working now. They put on their purpose and agenda, innovate and disrupt. They are the second largest in their business. And what they put in their agenda is, we will disrupt the current leader with technology. And then this play between CIO and CFO is once they understand the potential is smaller, if that makes sense.
It does. No.
Yeah, no, to play off of what Chen said, it's, you know, I think the term that we've started using is, do you want to create the blockchain or do you want to get blockchained, right? And I mean, we see that with, you know, it's a matter of time. And do you want to have a seat at the table, or do you want to be, you know, subject to the rules of others who were at that table? And I think that is, you know, where a lot of companies, again, I think there's a lot of kind of built-in conservatism. They don't want to take risks. But I think when you understand, hey, the rest of the ecosystem, as Chen said, right, it's a multi-party system. If everyone else is there, you know, if you name it, if you're in the airline industry and the kind of manufacturers, the airlines, the pilots, the Boeings, you know, everyone, right, across the supply chain is on, and you're not there, then you really have kind of, you know, everyone has a leg up on you. So I think that's kind of when people see traction, you know, and this is why I think that there's been such cyclicality in the conversation, is everyone's looking over their shoulder, right? They're trying to say, if someone else is doing it, I need to do it because I don't want to be in that position. But yeah, I think you're right. I think that a lot of the, you know, the kind of struggles, it kind of goes back to the incentives of both the CFO and the CIO, right? CFO may be thinking about from a numbers perspective, I want to, how is this going to save me money? How is it potentially going to make me money? CIO is trying to kind of support the organization. How am I mitigating any risk from a security perspective? So I think if you have to be able to speak both of those languages sufficiently. And I spend a lot of my time in my role from working both sides of the aisle, trying to speak the languages of both and trying to kind of appeal to their incentives. And I think if we're successful in doing so and speaking in their language, what really appeals to them, we're going to get increased adoption.
So I want to build on something Noam said. The way I experience it is really the question that I don't want or we need to ask, but is much smaller, is how is this going to save me money, right? You want to save money by doing a more efficient process. RPA is a much more mature technology than blockchain. And the real question is, I'm not saying that this is not saving money, and I'll maybe say something about that in a second, but the real question is, how do I reimagine the business process and enable things that I cannot do today with this technology, not just automate the existing process. You want to automate the existing process? Wonderful, go do RPA. And I'll give you an example. Did Microsoft already go down the path of having robots do the royalty calculation? Yes, they did. But if you think about how this industry is evolving, if I gave the FIFA example, you maybe, if you're a fanatic fan, you buy the new version of the game once a year. Now think about Apex Legend and what's the name of the other one? My son plays it all the time. Oh
Fortnite.
my God.
Fortnite.
Fortnite. Thank you so
Fortnite.
much.
Oh, yeah.
Fortnite and such. You get the game for free. And,
Yep.
and the transactions are weekly or even daily. Now go
Yep.
automate that. And this is where blockchain solutions allow you to reimagine the way royalties are calculated, for
Yep.
example, and there's many other examples, right? So the real question with the CFO, CIO is around how do we reimagine the business, not just cut 3 heads of bookkeepers in finance. That's and the balance. They just to complete the thought. It's not that they would go forward if we don't show them the immediate business case, but the immediate business case isn't enough if you don't also think about the long-term values that come with tokenization of assets, for example.
Mm-hmm. Yeah, sorry, I just want to add, because I think that's absolutely right. I think reimagining the process, right? And I think you can turn that into kind of a dollars and cents game, right? But I think that's, you mentioned RPA. It's very easy to understand, hey, John used to download this Excel spreadsheet, used to do all this stuff. It took him 5 hours and he was done. Now we're going to get a bot to do it, and it's going to take 40 seconds, right? I think that's very easy to understand. There's a clear ROI on that. People can do that. I think changing the dynamic and the shift there is some of the challenge, right? Is people can't necessarily take themselves out. They don't understand, what do you mean? And I use the example of kind of customers and clients, customers, right? What, the invoice issue that I started with. Well, what happens if there are no invoices, right? And what happens if there is no collections department, right? Or you have that one person instead of 50, and all those customer care agents that supported the billing issues, right? And so then it kind of changes the dynamic. And that's where I think it, again, going back to the points made before, it takes, I guess, ingenuity, it takes courage, it takes able to kind of take a risk there and see it a little differently than the next quarter's financials, or, just, run around the track faster. How do we make the track smaller? Sure. So yeah, I think that's a great kind of point to bring up, is in how we talk to our kind of partners on the client side.
So with the last few minutes, time we have remaining here, I want to shift gears, because you said the word dollars and cents, and we're now talking about what happens if there's no invoices. Considering what the United States Treasury and the Federal Reserve System has been experimenting with, at least in open discussions, and also where China is progressing with their digital renminbi and their currency networks, what does an accounting world look like where ultimately the nature of banking completely changes, and instead of the line on the accounting spreadsheet just being a number of money that's derived from a bank report, I download my balance into my QuickBooks or into my Microsoft Dynamics or Oracle Financials, whatever, the number that you see is just tantamount to your Bitcoin balance in your wallet. That's actually the money that's captured and stored and reported, and charts of accounts payables, accounts receivables dispense with all of that intermediary ledger and all the other accounting that goes along with it, and we're literally moving real value in real time across these networks.
So if I understand the question is does accounting or the accounting profession kind of go away and is replaced by code? And I would say that the accountants, very much like undertakers, are here to stay, right? That their job is not going away. Their job dramatically changes. So from auditing samples and retroactively, you audit smart contracts before and in real time. you audit, as we said, 100% of the transactions, you audit the exceptions, because now when you audit the 100%, it's much easier to identify these exceptions, and therefore the audit profession changes. I think that the ability to read smart contracts would be critical. Does that mean that every accountant needs to know solidity, for example? No, not necessarily. I think that there's many tools that are being developed to make this much easier. Same way as today, in order to spin up a website, you don't need to know how to write HTML or whatever. Same thing would happen in the future of audit, but definitely the profession is going to fundamentally change. And this is why you see the big four investing so much money in this technology, because I think that they realize that.
Yeah, no, I agree. And I think that some of the financial principles won't, even if some of the ways in which we transact change, the financial principles are still going to be around. So, if we enter into some agreements and we transact, I still, whether that's paid in some digital asset, it doesn't mean it needs to be paid today in that digital asset, right? The concept of receivables, right, and kind of working capital and cash flow, that will still, I believe, be sustained, right? Because you met whatever kind of trigger, and then it's still, you don't need to actually pay that for 30 days or 60 days or whatever your terms are, right? So theoretically, that's still a receivable on your balance sheet. Is that have you met all the requirements? Have you met all the revenue recognition aspects? I think those are still going to be, need someone to opine upon them, right? Is that collectible? All those kind of criteria are still have a judgment call on them. And I don't think that will change just because the way in which we've transacted has.
So there's one question that I started to type the answer, but I would say it instead. No one is recording this, right? No, I'm joking. But the question is, how would we see the top accounting firms adopt blockchain procedures? So what I'm going to say is almost blasphemy, maybe for some, but I believe that we will see in the future competition between the big four, much more than what we see today. We would need to see the big four agree on standards and on ways to audit a network, because by definition, a network of companies would have audit clients in them. That means that that if we have a network where EA audits some and PwC audits the other, very much the same way like today, I would need to be the implementer, the system integrator for PwC's audit clients, and PwC would need to audit my blockchain work, and vice versa. That means we would need to come to the table and agree on rules of play and standards and protocols. Today, as far as I know, and I probably know, this is not happening at all. But if you ask me, in the not so distant future, the big four would have to adopt this concept of cooperating and transparency over a blockchain to an extent and agree on these standards. Otherwise, we would all lose. So in a word, what would we find useful in the future? Co-petition.
Interesting. No.
Yeah, I think to answer the question, I think yes, right. I this is one of the things I always challenge some of my leaders on is, and maybe Michael, to your question before, is how do you convince others to kind of take a risk, right? And I think as we kind of go across this digital journey, right, I think drinking our own Kool-Aid, if you will, is a really good way to prove that you're in, not only that you have the expertise, but that you're doing it yourself. You're putting yourself, quote unquote, at risk. There are kind of several internal initiatives. Again, looking at kind of at processes, is there a way to employ a blockchain technology to solution that? There are a few that I know of on a global basis that are kind of in the works. Ready for prime time yet? I don't think so. But I think we are certainly challenging ourselves to ask that question of where could we be doing things differently if we believe that this is a disruptive technology that really is going to change the way business operates. How are we kind of employing that ourselves? So absolutely, we're asking that question.
Excellent. Well, we've pretty much come to the end of our clock here. It's been a great discussion with you gentlemen. I greatly appreciate the effort to hang out here on this panel. I'll turn it back over to Jack.
Yeah, that was wonderful. Thank you so much, everyone. Definitely think there was a lot of really good takeaways. This is kind of stuff that you can't really get anywhere else. This is some straight from some of the top innovators. So great experience. Other than that, I think that we will be wrapping this up and moving on to the product demonstration. So yeah, thanks for coming, everyone. We're gonna go on to the next event.
Great.
Have a great evening.
Thanks, everybody. Thank you.